scraping putty and
JB's here tonight. Woohoo! Alrighty, get this party started. Dividend investing for weekly cash flow. Hey, Dark's in the house. Dave's here too. Alright, so we got over there on Instagram. Okay, I'm still getting everything set up. A little bit, running a little late, but you know, it is what it is. Okay, Instagram. Is that the right phone right there? Hey, Michael, how's it going? Thor, the mighty Thor, has arrived. Thor's in the house. All right. Getting the rest of the cameras rolling. Alrighty, alrighty, alrighty. Interesting. 3, 2, 1, and we're off. Here we go. And there you have it. Well, Facebook. Oh, only 25 people so far? Wow, not a whole heck of a lot going on tonight, do we? Hope you guys all did good today. 31. Don't allow. Michael Sinclair commented on my videos. Bummer. What are we looking for? Right here. Here we go. Got this one. Up and running. We're going to get started in a couple seconds. Just get one more camera up and running, so it won't be that long. Dividends for weekly cash flow. Wow, villains. Dividends for weekly cash flow. There we go. Public audience. Hey, Michael. Michael, you're everywhere. KJW. Jenny, I work for Pfizer. We usually pay dividends. Yes, you usually do. And you pay very nice dividends, as a matter of fact. No, it's not made for children. And we're getting ready to go live. Here we go. That thumbnail. YouTube always wants a thumbnail. Well, why don't we take a look at Pfizer first thing this morning? Oh, this evening. Pfizer will be first on the list. Nothing, I guess. It's an interesting name. Nothing, I guess. N-O. N-I-O. Oh, never heard of N-I-O. Let's take a look at N-I-O so I can say no quickly. N-I-O. The first no of the day. N-I-O. Neo Inc. Interesting. WBA. Hey, Roscoe. WBA. Got to get my trusty old notebook out. WBA. Okay, take it out. First look this evening. But cheap. You took in Neo. No, we're going to take a look at Neo right now. Here's Neo right here. 557. Macy's on both dogs. I love me some Macy's. I do. All right, so let's take a look at NEO. Yahoo! Starbucks is already on the list, Doc. Okay, it's already on the list. Fastbacks is pretty much to the top of the list. What's your broker? That would be Think or Swim through Charles Schwab. Oh, I get me a cough drop. Okay, I might not be able to do the whole night tonight because my throat is really sore. I'm not used to doing this much. D-Dog. D-Dog. Okay, I don't know if you're just making a comment there, Bobby, D-Dog, or if that's actually a broker. Do you trade Forex? No, I do not. Okay. Got to help out the throat. It's a little sore. NIO. NEO Inc. Why not? I don't like sitting in front of the computer all day. No rhyme or reason to Forex. Just my humble opinion. That's all. What do they call that? Forex is all news driven. I have to say, yeah, there's no dividends for NEO. NIO. Yeah, that's a no. Sorry. Up on the list from yesterday, IVZ. So sorry, whoever wanted to look at NEO, NIO, yeah, that's a no. Energy Transfer. Oh, no, I want to go here. ET. What's the dividend look like for Energy Transfer? Hey, Ginger, how are you doing this evening? We're going to go take a look. Okay, the screen right behind me, the screen here, that is live on YouTube. For those guys who want to watch it, you can watch it on your television because it's actually on live broadcast on TV. Kesh, how you doing? Well, they cut their dividends a while ago. 2006. That's not quite 20 years. Fantastic. How are you? My throat is a little sore. Other than that, not too bad. I've been buying slowly for the last few years. Well, that's cool. What have you been buying for the last few years? All right, so Energy Transfer, you'd have to ask yourself the question. And that question would be, they've only started paying dividends in 2006. Okay, so 2006, then 2018 years. Okay, now 18 years doesn't sound that bad. Okay, but at one point, where were they? Right there. In 2020, they cut their dividends. Okay, so I'm not 100% sure how you feel about that. But lately, they've been increasing them slowly. So, again, that's a question that you're going to have to answer for yourself. But let's take a look at the numbers for those people who like ET. All right, check out the last 30 days. Yeah, 30-day, previous 30-day high here, 30-day bottom, back up your 30-day top, back down, and then back up again. There's not much space between here, which was today's high, and the 30-day high, which is here. So how much higher do you think it's going to go? Are you going to be able to get your 1% out of that? All right, so let's move over. So look at the 16. Yeah, it's going to be a no. Look at this, look at the 16. Right now the price is $15.95. The closest strike price is going to be the 16. Okay, the 16 right here. And it's only paying out 11 cents. That's not 1%. So ET is going to be a no. Okay, let's look at IVZ. IVZ. That's a no. NSC. Who came up with NSC? You trading options too? Yes, we are trading options too. Nice question, but Roy J, how you doing today, buddy? All right, NSC, Norfolk Southern Company, 235, 260. Yeah, that's going to be a tough one. I'm not being able to give you a good answer. You look at the spread, 215 to 261. That's like a $50 spread between the two, which is not quite right. But, however, if you look at the last traded price, the last traded price was 235. If you take a look at the 235, that's paying $4. That's a nice number. But how often has NSC increased its dividends? Nice, nice, nice. 2006, 12, 18 years. I actually like it, 18 years. I'm going to write that one down. Now, I'm wondering if NSC is on my list. To find that out, let's check it out. NSC is not on the list. Well, let's add it to the list. Now, I don't often add to my lists. NSC. And simple. There you have it. Well, now NSC has been added to my list. So let's take a look at the other nice, neat, fun stuff about NSC. I can let it slide. 18 years of increased dividends. You know, it might slide. Let's take a look at the charts, see what happens. Here's the high of the year. Here's the low of the year. Here's where it was a year ago, and here's where it is now. Okay, I like the way it looks. So let's take a deeper look. Right, a year ago, we're at 204.78. The bottom of the year, 182.23. Okay, the top of the year, 263.83. That was in the, what is it, the middle of March. Okay, last 90 days. Right there, here we go. 90 days ago today, we're at 235.65. Topped out the 13th, still the same, the 13th, 263.66. Bottomed out on Wednesday. And 2 days to the upside. Perfect time to jump in. I like it when she comes off the 30-day top down to the new 30-day bottom and 2 days to the upside. It looks good. What program am I using? All right, Ginger, I'm using Think or Swim from Charles Schwab. Okay, it's a free platform. It doesn't cost anything to use it. But that's why I do most of my trading through Think or Swim. All right, so I like where it is. Look at the movement. Look at the last 30 days. Okay, your 30-day high right here. Your 30-day bottom right there. 2 days to the upside. Perfect opportunity to jump in. Now, what does this company usually do this time of year? Well, for that, we want the seasonality chart. Basically, check that out. Just sideways. Okay? Just going sideways for the next couple of weeks. I like that. All right. Let's take a look at the numbers. Okay, 261. Yeah, I can't really tell. I can't give you a good number because look, the last trade was 235.55. The bid, 215. Oh, come on, that can't be real. The ask, 261. That can't be real either. So if we get close to the last trade, the 235, okay, the 235s are selling for 440. That's well over 1%. Even the 237 and a halves are over 1%. The 240s, 1%. So these four right here are well over 1%. So why not take a look at it? All right. So NSC, I wrote it down. Okay, right up here, wrote it down in my upper corner. That tells me it's a interesting one to take a look at. EL. EL. I never heard of EL. EL. Estee Lauder. Ooh, Estee Lauder is on the list. NSC is way out of my price range. Sorry, Roscoe. We have some more if you have some. Now, Roscoe, did you take a good look at the scanner? Okay, the scanner, right here, and the stock scanner right there, it allows you to take a look at stocks at a certain price. Okay, get this out of the way. Stock, maximum price, 12 bucks. Shares minimum, yeah. Nope, we don't need that. Add filter options. Yep, have options available. Oh, look at that. 51,000 choices. Yeah, so you can use the scanner to scan and find out good trades for stocks under a certain dollar, staying within your price range. All right, let's go back to where we were. Right there we go. That's good, right about there. Okay, Estee Lauder. Okay, 132.94 was the last trade. So 132.94 is the bid, 135.86 is the ask. So let's see, 136 is 85 cents. Yeah, that's not going to work. So no to Estee Lauder. Excellent idea, filtering out stocks under 80 bucks. Okay, EL's a no. L, is that Leggett and Platt? L-E-G? L-E-G. Leggett and Platt, okay. A monthly, no. NSC, we already looked at. DG, Dollar General. Okay, Dollar General, 137.50 to 138. Ooh, well over 1%. Check it out. Okay, I can buy it first thing Monday morning. 137.50 to 138, $1.68. That's well over 1%. Let's take a look at the charts and see what they look like. First thing I want to see is where's the high of the 1 year? Way up over here. Hey, where's the low? October. Where was it a year ago? Way up high. Where is it now? Way down here, 137. I think I can deal with it. All right. I like the 1 year chart. Looks pretty good. Okay. Now, a year ago today, we were at 218.16. The high of the year, 221.50. Okay, she drops down to the bottom of the year. That was 101.09. 101.09. And that was in the middle of October. Finished out the year at 138.40. The last 90 days. $90 days ago today, we were at 135.36. Okay. The low of the 90-day period, we got a double bottom. Check that out. The 13th and the 14th. Fat Tuesday and Wednesday, the day after. That's the 13th and the 14th of February. For those guys who don't know what Fat Tuesday is. The high of the 90-day period on the 14th of March, 168.07. Down, up, down, up. We have our 30-day top. 30 days ago, okay, we opened up at 154.63. Okay. Our high, our low, where was it? Where is it? Okay, so from there, 30 days ago, 154.63. The 30-day top was 164.12. Okay, 164.12. From there, she drops all the way down to find the bottom right over here. 2 days ago, 3 days ago, Wednesday. Wednesday's a 30-day bottom, and that was 135.42. Okay, the next 2 days, Thursday and Friday, not really up days, but not quite new bottoms. Okay, Thursday's bottom was 136.13. Friday was 135.97. Okay, I'd like to see 2 green days in a row. One on Friday. If Monday's going to be a green day, that'd be a perfect opportunity to jump in. What does Dollar General usually do this time of year? Here we go. I don't know about you, but that looks like it's going down, okay, for the next couple of weeks, the next 3 weeks. Okay, the 10th right here, which is next Friday, okay, the Friday after that, right there, yep, the next 2 weeks to the downside. Now, don't get me wrong, okay, seasonality is only one part of the puzzle. Now, the trend, which is what direction is the stock going at the moment? Well, at the moment, she's going down. It's going to continue to go down until it finds a new bottom. Once it finds a new bottom, turns around, goes back up, that's the time to jump in. Okay, at 138. What's up, Austin? How you doing? At 138, that's a $1.68. So let's take a look at a $1.68 divided by the purchase price, 137.50. That comes to a grand total of 1.22% for the week. Now we're looking for 1% per week. I don't mind 1.22, but you gotta like Dollar General. I do like Dollar General. All right, let's get this thing out of the way. All right, so DG look good. I'll write that down. All right. Starbuckies. Now, I do own Starbuckies. Bought my key calls back for a penny today to jumpstart next week's position for key at 20-cent premiums. Ooh, cool beans, Secretariat. Let's take a look at key. I like key. I've had key plenty of times. Last 30 days for key. Check it out. 30-day top right there. Drops down. Here's your 30-day bottom to the upside. A little bit of a pullback. Nice time to jump in. Not bad at all. Do I ever do that? Yes, I do. Now you're getting 20 cents a premium. That's over 1%. Right now the stock's at 15 and a quarter. Okay, so if I was going to buy it at 15 and a quarter, yeah, those numbers don't work out. I mean, look at it. I mean, if you got 20 cents, you made your 1%. But look here, 15 and a quarter, the 15s are going for 18 cents. But you're losing a quarter right there. So no, those numbers don't work. Sorry. Hey, thanks for the strategy. Made 1% on TXN, 175 strikes. Called away today. Well, that's what we're here for. I'm glad it worked out for you. Yes, they do for me. Bought it at $14.95. Well, hey, as long as you're getting your 1%, dude, that's what it's all about. Okay? And Key Bank is not that bad of a bank. I believe it's on Warren Buffett's list. Okay, so can't go wrong if old Warren has it. All right. That being said, ooh, look at this. Starbucks. That's what on the list now. S-Bucks. Now, I do have Starbucks. I got Starbucks at 88. Okay, well, let's take a look at the numbers, and then we'll go through it all. Take a look at the chart first, because I already have it, so we're going to look at the numbers anyway. A year ago was the high of the year, 109.72. See, here's the high, here's the low, here's where it was, and here's where it is. Okay, the high, like I said, 109.72. Finished up the year at 94.84. The last 90 days. Okay, the 90-day high right here, the 90-day low right there. Where was it 90 days ago? Where is it now? Is key low enough on a 30-day time frame for you? Hey, Roscoe, we're going to take a look at 1 second. Okay, we're looking at the 90 at the moment. Okay, 90 days ago, 90, that's funny, 90 days ago, 92.69. The high for the 90-day period is 97.99. All right, the last 30 days. All right, 30 days ago today. We have a double high here. Check this out. Once there, again here. All right. 30-day high, previous 30-day bottom, challenge a 30-day top. Okay. And now we're down to here. Okay. So here's the question you need to ask yourself. Do I like Starbucks at 73? I do. I bought Starbucks at 88, which is way up here. Okay. Now it's way down here. Okay. I'm not going to get any premium next week. But you know what? I'm not going to sell it either because it's Starbucks. I might dollar cost average down. That's a possibility. I won't know that until Monday. All right, you guys, we're gonna reboot. There's only 26 people here. That's crazy, and it's Friday night. So let's reboot. Don't go anywhere. We'll take a look again in a couple of seconds. See if this rebooting gets us more customers here. That's freaking crazy. 26 people. Is our latest research and development of Washstone. And here we go. See if this does it again. Got to get more than 24. That's crazy. People over here on Facebook, how you doing? People over YouTube, nobody there on YouTube. Only got a couple people on here on Instagram. Okay, Asky Stowy, Roscoe Barry. Hey guys, how you doing? How you doing? Hi, joined. Oh, can I get it? Missed. There we go. Oh. George Davis, how you doing? Robert, how you doing? Lux deals for you. Cool. Innovative concepts. Cool. Poyarak, T-Dog. Richard, Toy, give me your honest opinion on Tesla. No, that's my honest opinion on Tesla. Tesla does not pay dividends. You're buying a stock. If it goes down, you get nothing. If you want, stock appreciation, buy it today, maybe 10 to 15 years, it's worth a lot more. Fine, do it. But I don't even bother looking at it. Sorry, that's my honest opinion on Tesla. Okay, there's too many other companies that pay out a dividend and consistently increase every single year. So why would I tie up my money with a company that doesn't share out its profits? That's my honest opinion. Okay, I don't do companies that don't pay out dividends. All right. 56. Oh my goodness, you guys, if we can't get over 100, I'm not even going to bother tonight. Which one? Tesla. No to Tesla. Okay, well, we just did Starbucks. Okay, it's at 73 right now. Do you buy and hold Hayes? No, I don't. Okay. Bit shared the live. Get more pay. Here we go. 141. That's a much better than 27. Okay. Share the live. Thank you for that beat. Buy it. Okay. Anyway, so Starbucks at this moment. This is a question you got to ask yourself. Do I like Starbucks at 73? Because if you buy it at 73, I don't hold the stock, then how do you get a dividend? I don't get the dividend, right? You're new here, Hayes, so just sit and chill for a little bit and you'll see how it works. Okay, it's really cool. Okay, well, let's take a look at Starbucks for a second. I like Starbucks. So you ask yourself a question. Do I like Starbucks at 73? So if I was going to buy it first thing Monday morning, 73.45, okay? I could sell the 73s and get 94 cents a share. MRO good this week. Julie, how you doing? MRO. We'll take a look at that one. MRO. Right now we're looking at Starbucks. So if I buy Starbucks at 73.45, let me show you where that 1% comes in. Okay. Actually, it's not going to come in all this week. Okay. YOLO, ODT, SPY puts Monday. Well, there you go, floor man. Okay, so Starbucks doesn't work this week. Look at the numbers. 73.45, 73's 94 cents. Once you subtract that 45 cents out of there, you're not at 1%. The 75's, 26 cents, not at 1%. Now, Starbucks usually gives good premium. They're just not this week. So Starbucks for this week coming up. Now, can you please explain? how you earn dividends then. Okay, Gallant. Okay, hey, hold on for a second. I'm going to show you something. Let's look at 3M. 3M, okay? As soon as I find a good trade, I'll show you how it works. Ooh, I could do Macy's. That one always works. 3M, 97 to 98. No to 3M. MO, Altria. 44, no. Mickey D's, MCD. 270, no. NIO, we already looked at. PayPal, PYPL. PYPL. 66. There you go. You ready? I'm going to show you on PayPal. Okay, I'm sure you've heard of PayPal. All right, we already did Energy Transfer. TJX. How do you feel about Energy Transfer? We already did Energy Transfer. 52% annual dividend with covered calls. Huh, I don't think so. Hey, Matt, welcome to the show. If you want to see, I'll show you. Okay, so Matt, this is for you and somebody else. I forget who it was. Now, I'm going to show you how to get 1% per week, safe, predictable, and consistent. Okay, just keep an open mind because it's really not that difficult. We're looking at PayPal. First thing I want to see is where's the high, where's the low, where was it a year ago, and where is it now? Simple. Then I want to take a look at the numbers. The last trade, 65.70. The current bid, 65.57. The current ask, 65.64. Okay, those are the numbers right there. I didn't make them up, they're right there. Okay, now, if I buy it at $65.64, I can sell somebody the rights to buy it from me at $66. Okay, do you know anything about covered calls? 65.66. If I sell the 66 call next week, I will collect 96 cents per share. Now, let me get my calculator so I can do the math so you can see. Now, at 96 cents per share, right? The number's right there. I didn't make them up. These are, posted anywhere. Divided by the purchase price. Again, the purchase price right up there. I didn't make that number up either. Now, the purchase price, $65.64. Right there. The bid, the ask, $65.64. Divide it out. 65.64 comes to a grand total of 1.46. 1.46%. That's over 1%. And that's just on PayPal. Okay, I have dozens of these every week. Okay, I carry anywhere between 4 and 6 positions every week. Every week, I get an average of 1% per week. 1% per week over the year is over 50% per year. Now, you don't believe me, here are some of my trades that I made this year. Okay, so you got 10-minute trader. There it is. Slide on down to the very bottom. Ooh, and there you go. All right, week number 1. Okay, we've got CVS, Ford, General Motors, Macy's. 2.12%, week number 1. Week number 2, Ford, Lowe's, Clorox, General Motors, and Macy's. Week number 2 was 1.3%. Week number 3, Macy's, Ford, Capital One Finance, General Motors, Clorox. 0.85. All right, I missed my 1% that week. But hold on. Week number 4, Macy's, General Motors, Ford, Capital One Finance, Clorox. 0.9. I missed it again. But week number 5, 1%. Week number 2, 1.06. Week number 7, 1.9. Week 8, 2.03. Week 9, 2.32. Then all the trades are right there. Okay, the average that I've gotten so far this year, 27.26% since the beginning of the year. So, Matt Daddy, You don't believe it, the number's right there. Do the research yourself. Okay, and if you don't like the research, well, look at this one I'm giving you right here. PayPal. PayPal at this moment in time, 65.64. If I sell off the 66s, I'm getting 96 cents, and that, my negative Nelly, is 1.46%, which is over 1% for the week. You do that every single week. Now, this is just one. Okay, if I like this one, I'll buy it. If I don't, I won't. But let's take a look at the numbers. Okay, now we looked at these numbers. Now let's look at the charts to see if it's a good time to buy PayPal. All right, a year ago, PayPal was at 71.93. Okay, a couple of months later, we have our high of the year, the end of July, and that was 76.54. Okay, right here. That's the high of the year. Okay, the bottom of the year, right here, the end of October. Okay, the end of October, it was $50.08. Finished up the year at 62.16. The last 90 days, right there. Okay, 90 days ago, here's our high, the 90-day high. Here's our 90-day low. Here's where it was 90 days ago, and here's where it is now. Okay, fine. Now, 90 days ago, we opened up at 61.79, bottomed out a couple of days later at 55.77. A little bit of up, down, up, down, up, down, just what stocks do. High of the 90-day period was 70.66. Okay, and that was on the 30th of April. Okay, so the last 30 days, here we go, 30 days ago, 30-day high, 30-day low. Here's where it was, here's where it is. This is where I look for a pattern. I don't particularly like the one I'm seeing, but let's go through the numbers. 30 days ago, we opened up at 64.48. Okay, we hit a previous 30-day high at 67.24, dropped down and get that 60-day bottom. Do you play earnings play? No, Benny, I don't. I've seen positive earnings when stocks go down, negative earnings, stocks go up. Yeah, I've seen it all. Earnings aren't consistent. You know, you'd think positive earnings of stocks will go up. No, it doesn't always happen that way. That's why I don't use them. I use the EX date when they pay their dividend. Stocks have a tendency to go up just before the dividend date consistently. Okay, so here's our 30-day bottom, and that was 61.73. She goes up, makes a new 30-day high, okay, the new 30-day high right there of 70.66. 3 days to the downside. Okay, as much as I like PayPal and the numbers, these numbers right over here look good, it's going to be a no, not until it finds its new bottom. Okay, the 30-day high, she's coming down. So I'll wait for the 30-day bottom before I jump into PayPal. All right. That being said, what does PayPal usually do this time of year? Normally, ooh, interesting. Blue line represents the movement so far this year. Okay, that's the blue line this year. The red line represents 10 years worth of data. That's 2014, 15, 16, 17, 18, all the way up to last year. 10 years, the average. So I want to see right here, the first 2-3 weeks in May. So I come over to the blue dot, left click, drag right. And here we are right here. That thing's definitely go to the upside. Okay? So, me personally, I would wait for it to drop down a little bit more, because here we are right now. I wait for it to drop down a little bit more and challenge that 30-day bottom, over here. And then make the turn to go back up to catch it on the next swing. Because stocks only do two things. They go up and they go down. They go up, they go down. SoFi, no, I don't do SoFi. I don't think SoFi pays a dividend, do they? SOFI. Yeah, SoFi doesn't pay a dividend, so that's a no. 80s music, you're back again. How you doing? All right, sorry, Benny. SoFi, right here. This is Yahoo Finance. Okay, this is where I go to get my data from. Yahoo Finance says SoFi doesn't pay dividends. So if they don't pay a dividend, why would I buy it? Okay, I'm not looking for capital appreciation. I don't want to buy a stock and have it go up. Okay? I want a consistent weekly cash flow. Now, I noticed my little naysayer here. Where is he? Oh, come on. Where's my little naysayer? Yeah, Matt Daddy, $9.99. Well, Matt Daddy, you didn't say anything at all about the example I gave you. Okay, I showed you PayPal going to give you over 1% if you wanted to buy PayPal. Now, the question would be is, do you like PayPal enough to buy it and hold on to it? Because you never know how long you're going to hold it. Okay, ideally, I would like to buy it and be out by Friday. Buy it on a Monday, be out of it by Friday, collect my 1% every week. Now, I showed you my trades that I've done so far this year, averaging over 1% per year. I'm up over 26%, and we're only in week number 18. Okay, that being said, let's take some more questions. SIDU. I have never heard of SIDU. SIDU. Has no option, so that's going to be a no. Sorry, dude. You don't trade futures? No, I don't. 80s music. Still a little confused about the 1%. When you do the division. Oh, okay. You would be a trading god, 52%. Yeah, no, not really. I've been doing this for, oh my goodness, over 15 years now. For the other naysayers, let's go here for a second, just for the fun of it. Because I like going back and looking at this. It makes me laugh. Okay, we're going to go up to my YouTube channel. Okay, we're going to look at videos. Tesla. Tesla's a no, Benny. For me, anyway. If you want to do Tesla, fine, you do it. Okay, 11 years ago. Here's my little princess.
Stocks and arbitrating, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you.
12 different companies for the whole year and still make over 20% a year. That is easy. One trade a month. Who can't do one trade a month? But you want to bump it up a little bit? Let's do 2 trades a month. 20 days. 20 days in the month of January, you can do 2. One every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 blah. 24 for the whole year. And if you're getting at least 2%, that's close to 50% a year. 50% per year.
Okay, that video was 12 years ago. Okay, I'm basically saying the exact same things I said 12 years ago. I had a little more hair back then. It was, it was a more solid color, less gray. But what is their tax strategy? Ooh, while we're on the topic of taxes, I've been in communications with an ex-IRS agent. Okay, she does seminars showing people how to pay zero taxes legally. I have been in communication with her to try to get her onto the channel. I told her I do a lot of advertising to make sure we have a nice, decent size audience. Do I trade options? Yes, I do, Eddie. What about Ford? We'll take a look at Ford. Okay, so as I was saying about the taxes, I'm going to bring on a tax strategist, long-term stocks you like to buy low now. All right, Benny, the longest I've ever held anything, I've been trading for over 20 years. Longest I've ever held anything was 9 months. Amazon's a no. Amazon does not share its profits. AT&T, yep, it's on my list, but it's not on my list for this week. Okay, AT&T's not on my list for this week, but I'll write it down. We'll take a gander at it. But I noticed my negative Nelly disappeared. Oh, come on, down to 65. Do I have to reboot again? It's 10 o'clock. Celsius is a no. They don't have 20 years of increased dividends. 50. We're going to try this again. We're going to reboot and see if we can get up over 100. All right? Don't go anywhere for you guys who want to stay here.
A bottled, open the bucket can be...
Oh. Ah. Hmm. That being said, yeah, that's not even on the list. Macy's. Let's put Macy's. We already looked at Macy's today. We did. Macy's, Macy's, Macy's. Alrighty. My tea. How's it going, Roscoe? See if we can do this one more time. 50 people. It's a Friday night. I really don't like Friday nights because not a lot of people are here. And it's like, what kind of a crowd can we get on a Friday night? Randy, how you doing? Cuevo, Curtis, Abigail, John, how are you doing tonight? Friday night, shouldn't you be taking your wife, girlfriend, significant other? Hey, Mr. Tuchilo, back again. Nice to see you. Bob Buck, you're new here. 60 guy, you're new here also. Okay, I'm good with names. Okay, Jimmy Stewart, Fox Factory Holding. All right, Jimmy, you gotta give me the ticker symbol. I've never heard of Fox Factory Holdings. Okay. Now I have no problem whatsoever calling it quits for the night if we can't keep this crowd over 100 people. NIO. We already looked at like 20 minutes ago. We looked at NIO. It was a no 20 minutes ago. It's going to be a no again. All right. Sorry, buddy. Can you look at Starbucks again? All right, Roscoe. Why are we looking at Starbucks again? You got to give me a good answer for this, Roscoe. What are we looking at? GLD. We'll take a look at GLD. Hold that thought. All right, Roscoe, you want to look Fox F. FELG. Fox F. FELG. FELG. All right, we'll get to those. Abelmont and rolling. Cuervo, when do you take profit midweek? No. Because you said its premiums were bad, but I'm seeing premiums above a 1%. Well, that's awesome. Hey, landscape executives here. All right. The Starbucks 73. Okay, the 73. Correct. Okay. That's if you're, well, no, not necessarily. What you're missing is the 73 call strike is 94 cents. Yes, that's over 1%. But look at what your purchase price is. Your purchase price is 73.45. 73.45. You're losing 45 cents. If you're buying it at 73.45 and you're selling it at 73, you're losing 45 cents. So you take that 45 cents out of that 93 profit and you're below 1%. See what I mean? All right. Next on the list is Macy's. I think we already did Macy's. We're going to do Macy's again because it's on the list. All right. Oh, I was using the last price. Yeah. You can't always use the last price because that's just the last price. But at the last price, you'd be correct. GAVA. I never heard of GAVA. GAVA. AL Allocations Advisor. Really? Not even a symbol, dude. Not even a symbol. All right, we're on Macy's. We all know who Macy's is. All right. Macy's. Check it out. Who knows Starbucks could be good on Monday, though. You never know. Could be. Well, that's why we take a look at it again on Monday morning. All right, take a look at this. Macy's, 1976. Okay, 1976. The closest one is a 20, 31 cents. Okay, and you might even collect the difference between 1976 and the 20, which is an additional 24 cents. All right, so let's take a look at that number. The 20 is going for 31 cents, correct? The purchase price, okay, this is where we get the percentage. You take your profit, okay, whatever your profit's going to be. Hey, Big Duffies. How you doing, Big Duffies? Glad that you're here. I'm going to take the profit from the strike price. The strike price I'm going to sell. If I buy it at 1976, I sell a strike price of 20, which is higher than what I paid for it. And that at the moment is going for 31 cents. Now, to get your percentage, you take that 31 cents and you divide it by the purchase price, 1976. Okay, divided by 1976, and that comes to a total of 1.56%. Are we buying Starbucks? I already own Starbucks. 80s music. Tums are bad for you. Yeah, well, I got gas, so it's either that or well, what else did the wife give me? Omeprazole. Okay. Now, when I take a look at the Tums, active ingredient, calcium carbonate. You know what that is? That's ground up coral calcium carbonate. What's in omeprazole? I have no idea. I own 73 stocks on FELG. I have no idea who FELG are. Starbucks is down. It's really good time to buy. I have 5,000 in Starbucks. Cool beans. I have no idea how much I have in Starbucks. I know it's not 5,000. Oh no. Starbucks is in a different trading account under a different trading strategy. Big difference. I made 10% off my Starbucks this week. I'll probably make nothing next week because I bought it at 88 and now it's crap. Okay, CAVA, yeah, no. Sorry, Glock Guy 9. That company does not have 20 years of increased dividends. I have really bad acid reflux. Nexium, 24 hours is a lifesaver. Yeah, Nexium. Yeah, but what's the active ingredient? Is trading much like chess? Well, it can be. Okay, to me, it's just a game. Okay, I take my list of stocks. Okay, there's 9,503 stocks in the stock market. Out of all of those, 98%, no, sorry, 97, I did the math the other day, 97% of those I don't even bother looking at because only 3% are worth my personal time and effort. Okay, because I want to make a safe, predictable, consistent 1% per week. And I only get that with 3% of what's available in the stock market. I don't want to live forever. Anyway, might as well be happy. Well, I wouldn't want to live forever. I used to have an argument with my Bible study teacher. He says, well, if you do this, this, and this, you can live forever in eternity. He says, I don't want to live forever in eternity. That's a long-ass time. I could do 4 or 5, maybe 600 years. Maybe, if it's fun and interesting. But after 600 years, why would I want to hang around? He said, that's not the way it works. I said, well, can't I choose? He says, no, you can't. Well, what's the point then? ADM, Archer Daniel, ADM. I wish we could live 200 years so we go, wait a second, I want to hear that question. All right. I wish we could have lived 200 years so we can keep investing till we turn 150. Well, you know what? I would really like to know what kind of condition this old body is going to be in. I'm 60 now, okay? Don't get me wrong. I don't mind at the moment. I have a few kinks and what do you call those weird things? Hey, Wade, how you doing? I have a few kinks when I wake up in the morning. It's like, oh, that wasn't there yesterday. If I could keep it where it is, or maybe when I was 30 or 40, yeah, that would have been awesome. I wouldn't mind, this age for another 100 years or so. I could do it. Not a problem. But if I get older and this starts to fall apart, yeah, no thanks. All right, Secretariat. You should try apple cider vinegar and a drop of Tums. Yeah, I have some apple cider vinegar. I used to do a shot of it, and that doesn't always work. Do the math on that. Easy. Easy saying something. Do the math on that 1% again, please. With Honeywell. Honeywell. Give me the ticker symbol for Honeywell. Oh, Research GDT. All right. How do I buy INDX on Fidelity? I have no idea. I don't have Fidelity. Jen's here. Hi, Jen. How'd you do this week, Jen? 60 is only 1/3. You are at the begging of the road. I like to think you're saying the beginning of the road. H-O-N. H-O-N. Honeywell, 196 to 197. Yeah, Honeywell's a no. Check it out. Are you ready? The purchase price, 196.74. The closest strike price, 195. That's $2. I'm losing $1.74. If I buy it at 196.74 and I sell off the 195s, yeah, that number doesn't work. Okay, it's less than 1%. If I go one strike higher, the 196, that's only 80 cents. That's a no. Sorry, Easy Tool Guy. Sorry, just doesn't work. Try good digestive enzyme vitamin. I'll have to try that one too. All right, CF, Consolidated Freight. Uh-oh. Oh no, Jen, what's going on? Spider, no, I don't do SPY. Sorry, it doesn't have dividends. I bought stocks, dividends 3 weeks ago. They posted but did not show up in my position. Well, Philip, when it comes to stocks and investing, there's 4 dates you need to remember. All right, let's go take a look for a second. There we go. 4 dates. Okay, 4 dates you need to remember. The announcement date, number 1. The EX date, number 2. The date of record, number 3. The payment date, number 4. Okay, now, the announcement date is when they tell you when they're going to pay the dividend and how much of a dividend they're going to pay you. The EX date is the last day the stock trades before the dividend's paid out. The date of record, basically the very next day. Oh, I can take this off. It's starting to get a little warm. Okay. The date of record is basically whoever owns the stock on the date of record is entitled to the dividend. Okay, and then the payment date is when they actually send you the check. Okay, get some more of these questions. Sorry, I use broken English. Okay. I heard Citi is cutting 10% of their workforce. Well, okay. Didn't Elon Musk cut like 70% of his workforce on Twitter, and yet they're still working fine? What does that tell you? Basically tells you that there's so many people there ain't pulling their weight. They got that 80-20 rule. You ever hear that 80-20 rule? 80% of the work is done by 20% of the people. All right, so get rid of the other 80% is not doing anything, not carrying their weight. Should solve the problem. OG, Fox F. Never heard of Fox F. I swear, one of these days I'm going to do one of those videos. Like, what the blank were you thinking when you bought that? All right, Fox F. F-O-X-F. F-O-X-F. Fox Factory Holding. Yeah, dude, that's a no. Let me explain why it's a no there, Jimmy Stewart. Jimmy Stewart, Donna Reed, my favorite movie. It's a Wonderful Life. Actually, the original title for that was The Greatest Gift. All right, anyway. Monthly options. Why don't I like monthly options? Well, here's your answer. You ready? How many months in the year? 12. That's only 12 opportunities to collect a check. Why do I like weekly options? Well, there's 52 of those in a year. I can collect 52 checks. Okay? Now, granted, every once in a while, you can get a 2 or 3% premium on a monthly. But at 2%, that's 24% a year. At 3%, it's 36% a year. But 1% per week with weekly options, that's 52% a year. Okay? It's just pure math. I don't like monthlies. I just don't. The numbers just don't work for me. And here's another thing. Let's take a look at this chart for a second. Okay. Here's your high. Here's your low. Okay. She's going to the upside. Okay. Is it easier to predict where this is going next 5 days or the next 30 days? Okay. I give you a rough idea what's going to go for the next 5 days. Look, here's your bottom. She's going to go up a little bit. Okay. By next Friday, she should be either where it is now or a little bit higher. 30 days from now, no freaking clue. I have a good idea, most of the time, where the stock normally goes before the EX date. Okay, 10 days before the EX date. Where's it going to go based on the chart and considering the dividends coming up? Because stocks have a tendency to go up just before the dividend. That's why I use the dividend as a time frame on when to buy the stock. OG, I never heard of OG. Onion Global Limited. Yeah, no, nothing's even popping up with OG. NASDAQ, no, I don't do NASDAQ. Okay. DCI. Yeah, no, another month late. Okay, same answer was 2 seconds ago. There's only 12 months in a year, which only gives me an opportunity to collect 12 checks per year. Yeah, that's a no. Which stock do you have circled so far? You're sneaky there, Roscoe. You only get those questions. Paramount, Gap, Mosaic, Walgreens, U.S. Steel, Consolidated Freight, Intel, IBM, Whirlpool, PSX, Macy's, and Starbucks, and Dollar General. Sneaky little bastard. All right. QYLD is a no. Not a stock. Yeah, that's funny. How do you, oh, did you check Ford? No, I haven't checked Ford yet. Any oil stocks? Yeah, I got a bunch of those. Coca-Cola is always a no. Okay, I love Coca-Cola. Don't get me wrong. They've been paying dividends for over 50 years. How does someone learn about this? Well, you could join our morning trading group if you go to the 10-Minute Trader. Okay, the10minutetrade.com. It's right. The link is in the bio right here. Okay, here. It is a video. Gives you a rough idea of what we do. Okay, the no risk strategy. That's what we're talking about here. Right underneath that, live trading online. Okay, $100 a month, live trading. You get to join our Zoom call every day, Monday, Tuesday, Wednesday, Thursday. Friday, we're on in the afternoon before the market closes. I made 32% gain this weekend. Cool beans. Jen, is Kraft Heinz usually a no? Is Al here tonight? I don't know if Al's here tonight. I like Walmart right now. Okay, well, let's take a gander at Kraft, KHC. At this moment in time, Kraft, 36.55. Okay, the 36.50s. Yeah, that's a no at the moment. Sorry, Jen. Julie, do you sell covered calls only on Monday or the rest of the week calls too? Usually, 98% of all my trading is done on Mondays. Rarely will I do a Tuesday or Wednesday if the numbers work. I had a great uncle who became very comfortable after investing in Coca-Cola after 40 years in dividends. Oh, that's good. Royal Phillips. The stock goes up before the EX date. Correct, usually. STZ. Constellation brand. 256. 264. All right, this is another one I'm not be able to give you an accurate amount, only because the last traded price, 256. The bid, 248.99. The ask, 264. That's a huge spread. Okay, the 264, yeah, that ain't worth it. But at 256, it still ain't worth it. Still not going to make it. Sorry. The stock goes up before the, yes, it does. Royal Phillips. All right, Royal Phillips, you got to give me the ticker symbol for that one. Okay, let's go back to the list. Macy's, we already did Macy's. Pfizer, let's take a look at Pfizer. PFE. Pfizer, 2781. The 28's only going for 18 cents. Okay, 27.81. The 28's 19 cents. GameStop is a no. They have not increased their dividends for 20 years or more. Tesla's a no. They don't even have dividends. What site do you buy your covered calls on? This is Thinkorswim from Charles Schwab. Okay, you go to thinkorswim.com and download this trading platform onto your computer. Hey, Mr. Malin. Yeah, GameStop is a no, dude. You just go for dividends. Yeah, I go for dividend stocks, specifically companies that have increased their dividends for 20 years or more. Why are you dividend focused? Oh, Kevin, awesome question. I'm retired. Okay, means I don't work if I don't feel like it. So in that case, I need a consistent income so that I can pay my bills. How do you do that? Well, you make investments. My investment is not even for a pump and dump quick profit, not even for that. What about IEP? So as I was saying, the reason why only dividend stocks, and specifically those that have increased for 20 years or more, do you buy back at 1%, always let them expire? I let them expire. Yeah, I don't like the pump and dump, dude, because someone's always at the short end of that stick, and I don't like bad karma. How do you feel about Apple's dividends? Not bad, okay? But let's stay focused on the question here for a second. So when you buy a stock, you're an investor, and you own a portion of the company. So the company has two choices. They either take the profits invested back into the company for capital appreciation, which means you could wait months, weeks, years, decades in order to get a halfway decent capital appreciation. Or best investment jobs for new finance grads, and I couldn't tell you that one. We're going to get to namelessly, we're going to get to that in a short second. But let's get back to my example. Okay, the company's going to either invest those profits back into the company for capital growth. Yeah, stay focused. I get that. For capital growth. Or they're going to share those profits with the investors with dividends. Okay, I'm at that point where I want a consistent weekly cash flow. The Can Man, he's back. All right. So I only do dividend stocks, specifically dividend stocks that have increased for 20 years or more consecutively. That means higher and higher dividends every single year. Let's say hypothetically, I buy IEP at $17.38. Okay, here's the price right here, $17.38. If the stock goes down, what am I collecting? Okay, if the stock goes down, what am I collecting? Okay, if the stock goes down and they don't pay dividends, I'm not collecting anything. Stock appreciation, yeah, I'm too old to play that game. Do you buy and hold or swing trade? I do swing trade. GameStop has been super profitable for a quarter straight and have $1.5 billion in cash reserves. Okay, let's go back GameStop, GME. GME. All right, here we go, GameStop. All right, now, 2012. That means they only have 12 years of increased dividends. 6 cents, 4 cents, 6 cents, 7 cents, 8, 9, 10. That's it. And they don't increase every year. Okay, they've had dividend. They had 2017, it was 10 cents. 2018, 10 cents. 2019, 10 cents. Oh, look at this. Nothing for 2020. Nothing for 2021, 22, or 23. Yeah, GameStop is a big fat no. Sorry, dude. Para and M has been my best profit makers. Oh, mine too, Wade. Okay, I like both of those. So what's your favorite dividend play? Covered call. Okay, that's it. I buy a stock, sell the covered call against it, and get 1% per week. Macy's has been averaging over 2%. So has in Paramount. I could be very happy collecting 2% every week, because 2% every week is over 100% for a year. I meant which stocks specifically. Well, I just told you I like Paramount, and I like Macy's. I like Walgreens. Okay? Walgreens, Macy's, Paramount. There's 3 right there. Okay, next on the list, Pfizer. Let's take a quick look at Pfizer. Thoughts on CLM? I have no idea who CLM is. What the heck is CLM? CLM. Cornerstone Strategies. Yeah, dude, that's a no. Okay? No options. No thanks. Can't read backwards. Well, Carl, in case you didn't know, which I'm assuming you didn't know, this right here, this screen here is live on YouTube. So you can go into your living room, put on the big screen TV, click it onto YouTube, and there you have it. Okay? You can look at this screen live on YouTube. What about Eli Lilly? $700 a share? Nope, I don't go over 300. Sorry. $20 to $25 stocks for your method. Well, I go anywhere between $10 to $250. That's about it. I had to walk away. What were your yay or nay in IEP? 1735. That requires some more investigation. Why on sim? I have no idea what you mean by why on sim, Brian. Okay, IEP. Let's take a look at IEP. IEP. Okay, $1, $2, $2, $2. 06. Okay, so 18 years worth of dividends, but they don't increase every year. They only increase sporadically. Okay, so 2008 it was 24, 2009 24, 2010 24, then in 2011 jumped up to 49. Then it dropped back to 10. They cut their dividend. Okay, and then 2013 they jumped up to $1, then $1.25, $1.50, and from 2014, 15, 16, 17, it's been $1.50. 2018, $1.75, 19, $2, and then it was $2 for 19, 20, 21, 22, 23, and then they dropped it $1. There's no consistency in that one. Terribly sorry. Brian Conley. Okay, hold on a second. I go back to who asked for IEP. All right. Namelessly. Okay, IEP is all over the place with their consistency on the dividends. Now, if I'm buying a company, okay, 1 year they're at $2, and the next year they're at $1, that's a 50% drop in income. Why would I do that? Ask yourself, seriously, if you're going to have an investment, okay, let's say hypothetically your investment gives you $1,000 a month. $1,000 a month. And then you find out now they're only giving you $500 a month. Why? Why would you put your money in a company that decreased its payments to its shareholders by 50% from 2023? Well, actually, May 2023, it was $2. August 2023, they decreased it down to $1, which is a 50% decrease. Yeah, that's a no. All right, sorry. SBFM. SBFM. Uh-oh. Having an issue with Yahoo. Hi, Yahoo. We'll be right back. All right, here we go. All right, SBFM, no dividends. No, thank you. All right, do you get dividends when you buy JC Penney stocks? You have to actually give me the stock symbol so I can look it up, because I've never bought JC Penney, which probably could give you some kind of indication that it's probably a no. Simulated trading. All right, if you want to do simulated trading, that's what I prefer, because it gives you an idea to how good you can get. So that way you're not risking anything. I've been simulating trading for over 20 years. I got 6 accounts. One of them is a simulated account. Why? Well, because I'm not always 100% sure about my strategies. one way to test it is simulated trading. CSCO, Costco. Wait a minute, CSCO is Cisco. CSCO. 47.20. 47. Oh, okay. The purchase price 47.20. 47 is going for 49 cents. Yeah, that would be a no. The 47.50, that would be no. Because even if it's at 49, okay, you're losing 20 cents right off the top. So you're not getting your money there. SBFM. Didn't we just look up SBFM? Yeah, SBFM's a no. Sorry, Regan. Okay, it doesn't have dividends, so why would I invest in it? Brian Conley, just curious. What are we curious about, Mr. Conley? Uh-oh. Uh-oh, I'm missing some. Okay, SBFM. Yeah, I already looked at SBFM. That's a no, dude. PBR. What the heck is PBR? Again, all over the place with the dividends. And 06, only 18 years worth of dividends. All right, well, let's take a look at the numbers. PBR. 1643. Yeah, that's a no, dude. 1662. The 16s are going for 4 cents. Yeah, it's not even worth your time and effort to do that one. Sorry. Bob Riss. Okay, Bob Riss, thank you for that. Secretary, I own IEP and it lays large dividends. I do not expect to be in it for long. Okay, Paramount Global stocks have been hammered. Yes, they have, but they also have a buyout on the table, which is giving huge premiums. PARA. Okay, right now, Paramount, 1324. The 1350s are going for 45 cents. Okay, the 13s are going for 67 cents. Both of those are way over 1%. But here's the thing. Take a look at this chart. Big update on Wednesday, big update Thursday, and you have a pullback on Friday. Okay, but still, I have Paramount. I have Paramount. Hold on a second. I have Paramount right here. Okay, now I'm into Paramount at 12.52, and I sold the 12s for $1.36. I got like 3% on Paramount this week. Okay, I love Paramount, but I have no problem holding on to it. Let's go back to this one. Where was I? PBR, where I looked at that, it's a no. JC. Ooh, okay. JC, I'm assuming that's JC Penney. Okay, JC's not coming up, dude. Okay, it's coming up Johnson Control, JCI. But just plain old JC is not there. But Cisco, here we go. Let's check out Cisco, 47.20. Yeah, the numbers aren't working, dude. Sorry. 47.20. The 47s go for 49. You lose 20 cents right off the top. You're getting 19 cents. Yeah, that's a no. Sorry. JP Morgan. 190. All right. Again, same thing. 190.89. The 190s are going for 202. You take that 89 cents off of your premium, you're way under 1%. Doesn't work. Sorry. Fascinating football videos. Berkshire. Yeah, I don't do Berkshire. PBRs or no? Where looked at that one? Uh-oh. All right. Favorite mailman. Cool beans. We have a favorite mailman here. Hey, look at that. Power Publish. Calvin wants to join in the conversation. I would, but I know for a fact that's not Calvin. Okay. Now, if you guys don't know who Calvin Hill is, he does Power Publish. Okay. He's big into cryptocurrency. He's pretty good at it too. Okay. Now, I've chatted with Mr. Calvin live one time. He says, yeah, he doesn't do that. Anyway, how do I join your website? Well, right up here in the bio, okay, where it says dividend investing for stock for cash flow. You click on that, and that will bring you to the website, the 10-Minute Trader. I've had this website for almost 20 years. Almost 20 years. Okay, investing in dividend stocks up to 50% annual returns, simple, safe, consistent, and predictable. You guys heard me say that all the time. If this is what you haven't heard me say, if you're looking to strike it rich overnight, this ain't it. This is slow. This is methodical. This is snail pace. You're getting 1% per week. I'm online trading for 10, 20 minutes a day, my own personal account. Now, when I'm teaching you guys, it takes a little bit longer, so it may seem more complicated, but it's really not that complicated. As a matter of fact, just for the fun of it, I'll show you an example in a couple of seconds. But for your live trading and to joining, it's right there. Okay, join live right there. That takes you to the Patreon. Which again, dividend stock talk from the Patreon, $100 a month. Okay, you get to watch over my shoulder. I do a podcast every morning. Okay, podcast right here. Okay, dividend stock talk podcast. There's over 600 or 700 podcasts. Okay, I've been doing it for a while, every single day. Okay, so let's get out of that, back to there. Yeah, but that's how you join if you're interested in doing that. But if you want to chat, send me a phone number. I'll give you a buzz and we can walk through what kind of concerns you have. Sending you likes behalf of Toke Media. Hey, Ryan. How's it going there, Mr. Ryan? Mr. Ryan and I are going to do some joint ventures together. Nice to see you there, Mr. Ryan. AMD. We already looked at AMD earlier. How about WBA? Well, Walgreens. I love Walgreens. One of the top on my list. Why is it the top on my list? Well, it's over 100 years old. They consistently increase their dividends consistently, and they're in over every major city in the United States. So why wouldn't I buy Walgreens? Let's take a look at Walgreens, and I'll show you why. WBA. Okay, first thing I want to see, before I even look at the chart, this is what I want to look at first. Okay, the last price, the bid, the ask, the volume, the open, the high, the low. Okay, those numbers will be written down in history. So anytime, 5 years, 10 years, 50 years, 100 years from now, when somebody asks, what was the price of Walgreens on the 3rd of May, 2024, you're going to see one of these numbers. You won't see any of these numbers, okay? These numbers are going to disappear. But those numbers you will see. All right, the last traded price, 1778. Okay, what is the 18 going for? Because that's the closest one, 1778. Which is the closest? 18. You can get a third grader to tell you that. What round number, or what's the number that's closest to this? 18. 18 is going for 20 cents. What is 20 cents? Well, 20 cents, you may think it's not a lot. However, let's check it out. 20 cents. What is the purchase price? The purchase price is $17.78. $17.78. And that comes a grand total of 1.12% for the week. But here's the main thing you need to ask yourself. Do I like Walgreens enough to buy it and hold on to it for a long time? Why do you ask that question? Because you just might have to hold it for a long time. Because stocks only do two things. They go up, they go down. That's all they do. Okay, right now, it's almost at the bottom of the year. Awesome time to buy it at the bottom of the year. But you got to make sure it's not going any lower. So, now that I like the fact that it's giving me 1.1%, okay, I want to take a look at the chart. First thing I want to see is the 1-year chart. Where's the high? Where's the low? Where was it a year ago and where is it now? That's the first thing I want to see. Whoops. A year ago, the high, 33.33. Now, if you think Walgreens is worth more than 33.33, you'd be dead wrong. Why? It hasn't hit 33.33 all year. If it was worth more, it would have went higher. Okay, we, you and me, the buyers and sellers, we decide what is too high and what is too low. Okay, 34, nobody wanted to buy it at 34. Because if somebody wanted to buy it at 34, the high of the year would be 34 or higher. Okay, but for some strange reason, as buyers and sellers, we knew Walgreens ain't worth 34 bucks. That's why it's never hit 34 bucks. All right, the bottom, let's take a look. Okay, the high of the year, 33.33. The low of the year, right around 17.28. Okay, we finished out the year last year, 26.25. The last 90 days, right, there we go. Last 90 days. 90 days ago, we opened up at 23.04. 3 days later, we're at the 90-day high. That's 3 months ago. Okay, that's the high for the 90-day period. It's the same bottom, okay, but here's the 90-day, here's the high, here's the low, here's where it was, here's where it is. What is the movement? What is the trend? They have an old saying, the trend is your friend right to the end. Well, the trend is to the downside. Then where's the end of the trend? To the downside? Well, it stops and then turns around and goes back up. All right, so let's take a look at the last 30 days. Here we go, 30 days right here. 30 days ago, first of all, here's the high, here's the low. Where was it 30 days ago? Where is it now? Okay, you're going to love this. You ready? 30 days ago, it opened up at 1875. 3 days later, we have a high of 1948. Okay, she drops down, hits a previous bottom at 1754. This is the previous 30-day bottom. She jumped up a little bit right there, pulled back down, jumped up again. Here's our new 30-day bottom right here, Wednesday. Wednesday is the new 30-day bottom. What's good about this? Well, look at Thursday and look at Friday. Thursday's an up day. Friday was an up day. Monday's a perfect opportunity to jump in. I'm actually going to write it's already written down and circled. So Walgreens, I have it written down and circled. Why? Because I like it. Okay, it's at the 30-day bottom 3 days ago. Okay, yesterday was higher, today is higher. That gives you a perfect indication. Is it 100% correct? No, it's not 100% correct. But you see the 30-day high here. Here's your 30-day bottom. 2 days to the upside. What happens at a 30-day bottom? Well, it's a 30-day bottom for a reason. And this, my friends, is not the 30-day bottom. This is the bottom for the year, bottom for the 90-day period, bottom for the 30-day. That's a triple play. It's a hat trick. Ooh, I like that analogy. That baby's a hat trick. The high for the year is here. The low for the year 2 days ago. Yesterday was higher. Today, higher. What's going to happen Monday? More than likely, by looking at the pattern, it goes down, it hits the bottom, turns around, goes back up again. That's a perfect time to get in. Now, if I did jump in first thing Monday, I would be paying $17.78, right? I can sell somebody the right. It's like I'm buying it for $17.78, and I'm selling it to you for 18 bucks. I'm making money right off the top on Monday morning. Okay, for that, I am getting a 20-cent premium. I know 20 cents is not a lot, but that's 20 cents per share. So if I buy 1,000 shares, I'm getting 2,000 bucks. Is that right? No. I'm getting 200 bucks. But still, that's over 1%. As a matter of fact, that comes to a grand total of 1.12%. Okay, and if you get 1.12% every single week for the whole year, multiply that by 52, that comes to a grand total of 58% for the year. Now, can you do this every week? Well, I have been doing it. What did I do this year so far? Okay, account number 1, 27.26%. You can check the numbers yourself. They're all right here. Every trade I've done. Now, what those numbers don't show you are the dividends I collected. And it also doesn't show you the difference between the strike price and the purchase price. Because every once in a while, like this example we're looking at right now, okay, if I buy it at 1778 and I sell it for 18, okay, in this example here, in these, I'm only showing you the premiums I'm collecting. Okay, 1.9, 1.19, 1.2, 1.5, 1.2, 0.9, 3.9, 4.63. Okay, I'm well over 1% per week so far for the year. That's account number one. Account number two is crazy, 56.85%. Now, account number two is a margin account. I do not suggest you get a margin account until you know what you're doing. You really need to research and really find out what the risk and reward ratio is. Yeah, I'm getting a higher rate of return only because, well, number one, I've been doing it for a long time. Number two, I'm picking the right stocks. Number three, we're still kind of in a decent market. We're not in a down market yet. Okay, when we're in a down market, these numbers change dramatically. But anyway, let's continue forward. So as I was saying, the question you need to ask yourself, do I like Walgreens? Well, it's been in business for over 100 years. Almost every major city in the United States has a Walgreens. Okay? Also, they consistently increase their dividends. So a better question is, why wouldn't I buy Walgreens? Now, I did buy Walgreens. I think I have it. How many accounts do I have it in? Hold on a second. I have it in this account. I don't have it in that account. And I don't have it in that account. Right, I'm not going to show you the others. I only share 2 accounts with you guys. But, yeah, I have 6 different accounts, but I only share 2 of them with you guys. So, that being said, I do have Walgreens in that account. All right, I like Walgreens. There you go. And I don't think I own it anymore. Do I own it? I think I sold it out this week. Yeah. Okay, yeah, I bought it at 1783. I sold off the 1750s and I got 47 cents. I made my 1%. It's going back into cash. So Monday I'll be picking out something different. Look at that. I got 1, 2, Macy's and Walgreens are both in the money. So I will be picking up another 1 stock next week, maybe 2. I don't know. We'll see next week. We'll see Monday because that's when I do all my trading. I do all my trading on Monday. Why? Well, because the highest rate of return I am going to get, okay, is Monday morning, because that is the most time that you have. First thing Monday morning, which is 9:30 a.m. to 3:59 p.m. on a Friday. For the week, that's the most amount of time there is, not counting pre-hours or after hours. All right, that being said, all right, user 159958, blah, blah, blah. We already looked at PBR. PBR was already a no. AMD was already a no. Sorry. CPB, Campbell Soup. Woohoo. I haven't heard that one in a while. CPB. Was I right? Campbell Soup. I was right. $40, $45.50. Yeah, dude, that's going to be a no. Sorry. If I buy it $45.40, the 45s are going for 35 cents. Yeah, that's a no. Sorry. Mr. W, what program are you using to view your chart? Oh, this here, my brother, is Thinkorswim. It is offered through Charles Schwab. So if you have a Charles Schwab account, you can download this for free right from thinkorswim.com. Download it onto your computer. You can do some virtual trading if you just want to practice, which is what I suggest everybody does. I've been trading for over 20 years and I still practice trade. Well, even nowadays, I still make mistakes. Okay, that's why I practice trade every day. Okay, I want to make sure that I'm right. Thoughts on TOST? Dividend stocks, 20 years increased dividends only. Cool beans. All right, 86. Thanks for that. Thoughts on TOST? I've never heard of that. What % of your margin equity do you use on your margin account? 98% of my money is invested at all times. Why? Well, I've been doing this long enough that I know the risks and rewards. I have enough money set aside that if something goes against me, I can roll the option forward so I'm not losing. Okay, so I haven't lost at all this year, which is a good thing. Okay, thoughts on Toast? Well, let's take a look at Toast. T-O-S-T. Toast Inc. 22 bucks, 22.74, 22. That can't be right. Are those numbers right? Do you see that? 23.13. The 23s are going for $1.54. No way that could be right. All right, let's take a look at Yahoo Finance and see what Yahoo Finance has to say. T-O-S-T. Toast, no dividends. Sorry, buddy. It's a no for Toast. Okay, even though those premiums were fat as hell, okay, you have to ask yourself, you have to ask yourself the question, why are those premiums so high? Those are unrealistic premiums. Let me give you, for instance. Okay, if I bought it at 23.13, right, and I sold the 23.50s, I'm picking up $1.33. Okay, so let's clear that. $1.33. I have divided by the purchase price, 23.13. That gives me 5.75% for the week. That's crazy. Now, they don't offer dividends, so it's nothing that I would do. But if any of you guys like Toast, take a look at it. You know, they don't have dividends, so it's not appealing to me, even though that premium is really fat. Now, not only will you catch 5.75, you know, 5.75, which is 5.75. If the stock goes above 25.50, you get an additional 32 cents. Is that right? No, 42 cents. An additional 42 cents, the difference between the purchase price and the strike price. That's freaking nuts. That brings it close to 6.5%. But for me, it's a no, because it doesn't have dividends. Okay, if the stock goes down, what am I collecting? Nothing. Yeah, those premiums are crazy. Holy cow. Anyway, what do you think about doing all your trading Friday close for the most amount of time? Unfortunately, Roscoe, you can't do your trading until you're back into cash. It means you got to close out all your positions on Friday. So, let's say 3 o'clock, I close all my positions. More than likely, I'm paying to close those positions out. I prefer to let them expire worthless, okay? Because I'm looking to get the 1% per week. Hey, Matthew's watching. Matty boy, how you doing? Just give Rocco a buzz. He misses you, buddy. All right. Anyway, what was I saying? Happens when you get old. You have a tendency to forget things. Oh, yeah. So as I was saying, I would have to buy back each and every one of those positions. That's money that I have to pay plus the commissions. I just prefer to let them expire worthless and then do it again on Monday. Okay, because you're no, I understand, Roscoe. You're a little on the younger side. You know, you're a little bit more ambitious, a little bit more, gung ho. Okay, I'm 60. I'm lazy, and I don't want to do that kind of stuff. I don't want to sit in front of my computer that long. Okay, if you listen to my video, say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Personally, my trade, I'm going to do one for you. Okay, I'm not going to say a word. I'm just going to, and you guys just watch. I'm not going to answer any questions. I'm just going to ignore you guys, and I'm just going to go through a couple of trades and see how fast I can do it. All right? Reason being is I like to sit in the front of the computer for 5 or 10 minutes, and that's it. Okay, 186. There you go. Hey, Salma Leah, Kale. Hey, is Lillian a trader from Vegas? How are you doing? Selma Lillian, I'm doing wonderful. What happened to GameStop, GME? Yeah, they don't pay dividends, dude. Or, wait a minute, I forget. I forget what the reason, why was the reason I said no to GME? Can you check H-bar, please? H-bar? Okay. You got one of those questions for you. Here it is. Okay. Now, I understand, people invest in certain stocks for certain reasons. H-bar, B-A-R. I can't find that symbol, dude. Sorry. Thoughts on Toast? All right, we already did Toast, and Toast is a no because they don't pay dividends. Sorry. Ooh, crap. Shorts are covering. Okay. It's not a traditional coin. Pfizer. All right. Pfeiffer? What the heck is Pfeiffer? It's not a traditional coin. I don't do coins, dude. BYD. Isn't BYD Boyd Gaming? That's on Warren Buffett's list. Okay, James? BYD is on Warren Buffett's list. Now, just because it's on Warren Buffett's list doesn't mean I automatically do it. Okay, it's a monthly. There's only 12 months in a year, which means I can only get 12 checks per year. I only do weeklies. Why? Because there's 52 weeks in a year. I can get 52 checks per year. All right. No such thing as special days. If you're playing options weekly, then the premium moves. Yep, you're right. Joe, how do you set up computer monitors so you can see multiple stocks at the same time? Billy, I can't help you out with that one, dude. Okay, 'cause I only do one at a time, and I don't sit in front of my computer. I do my trades, and then I'm done. Ryan, I can't escape this stream. Every one time I scroll, it comes up now. Uh-oh. AG&C pays monthly dividends. Yep, it does. Look up Joe. Joe-E. Yep, Joe's a no. Okay, again, it's a monthly. There's only 12 months in a year. Means I can only collect 12 checks per year. That's a no. Okay, are we ready to see some of the trades that I do, the way I do it? Okay, I'm not going to say anything. You guys just follow along. Okay, if you have the screen open up on your computer, you'll be able to see. Okay, I might say something here and there, but for the most part, I'm not going to. All right. First thing I want to look at. I'm just going to do like 4 or 5. That's it. IDEX. 86. What is a premium? Is that a subscription thing or something else? All right, a premium, basically, think of a premium on a stock option as a non-refundable deposit. I'll give you an example. Okay, SCHLD is a no. SCHD is a no. Okay. If you have a car sitting in your yard, let's say slap a for sale sign $1,000. Okay, Joe comes down the street. Hey, I'll give you $1,000 on that. Take $100 now, non-refundable deposit. Hold it to me for Friday. I'll come back on Friday. If he comes back on Friday, gives you $1,000 for it, you got your $100 on Monday because it's a non-refundable deposit just to hold it. He come back on Friday, he gives you $1,000, or he doesn't come back. Okay, he doesn't think it's worth it on Friday. All right, fine, sell it to someone else. Next Monday, you do the exact same thing again. Peter comes by and say, hey, take $100. I'll buy it for you $1,000 by Friday. Same thing. Either they buy it or they don't. When it comes to stocks, okay, you're buying the stock. This one right here we're looking at, Joe, $62. All right, that's the purchase price. Okay, the bid, the ask, the high, the low, all that crap. $62 is what you pay it for. So if you buy it for $62, you own it for $62. That number never changes. Okay, James, we're going to look at U.S. Steel in a little bit. All right, now, if I buy this at $62, I own it at $62. Now, I can sell somebody the right, but not the obligation, to buy it from me at $62. Okay, anytime between Monday morning and Friday afternoon when the option expires. Okay, options expire. Weekly options expire every Saturday. Okay, last time you can trade it is by 4 o'clock Friday afternoon. So, if I buy it at $62, I sell someone the right to buy it from me at $62. They are going to pay me a premium. Another word for a non-refundable deposit. Okay, you collect that right up front. What is 1% of $62? Okay, 10% of $62 is $6.20. Okay, 1% is 62 cents. Ariel, find the favorite love song. Keep buying shares. Yeah, no. Deej, he doesn't mean weekly dividends. He's referring to the stocks that have weekly options. I am referring to stocks that have dividends and have weekly options. Got to throw the both together. Good stocks. Okay, so now I'm going to show you a couple of trades, the way I do it. Okay, I'm not going to say anything. All right, I'm just going to go through a few motions and see if you can follow along and understand what I'm doing. First thing I want to do is go to Market Watch. All right, I'm going to stay with Warren Buffett's list because we all know who Warren Buffett's list is. Here we go. All righty, I'm going to do this week right here. Siri, Wells Fargo, Apple, Capital One Finance, and UPS. Okay, these little green dots represents the EX dividend dates. That's the day the stock, if the company has the EX date. So that means I want to buy the stock, I have to buy it before these green dots. So I'm going to look right here, this week right here. Okay, the 5th, 6th, 7th, 8th, 9th, blah, blah, blah. Okay, that's the week I'm going to look at. I'm going to go really quick and I'll show you why it only takes me 10 minutes a day. All right. First one I want to look up at Siri. S-I-R-I. Okay. 312. The 3 is going for 11 cents, but I'm losing 12 cents right off the top. Negative numbers, no. Wells Fargo. WFC. Wells Fargo. 59.94. The 60. 51 cents. Not quite 1%, no. Apple. AAPL. 183. Cool, 183. Okay, the 185 is going for, ooh, okay, that's 1%. Cool, I like it. No. Look at that right there. Hell no. It's going to have a pullback Monday more than likely. Apple, Capital One Finance. COF. 142.41. The 142 is nice. Gotta love it. Cool. Year ago, 90 days ago. Here's the bottom. Blah, blah, blah. Last 30 days. Right there. Okay, 30. Low. Bottom. Boo. 2 days to the upside. Awesome. Okay. I like the 143s. All right, 143. Here we go. Okay, buy 10 contracts. Get this out of my way. Okay, let's do 5 contracts. 500 shares. What does that come to? I'm going to do market order. There we go. Boom. Okay, I'm making $1,000 off of 70. Get my calculator up real quick. $1,045. That's my profit. What's it costing me? $70,458. Grand total of 1.45%. Good, cool. Off to the races. There you go. That trade's done. Hey, rejected. I don't have enough money. That's funny. Okay, let's go back here. That's Capital One Finance. Next on the list, UPS. UPS. 146. Okay, the 145. Nice. Over 1%. Cool. A year ago. High. Low. 90 day, 30 day. Nice, nice, nice. Right here. 30 days. Okay. 30 day high, 30 day bottom. Right there. Cool. Plenty of space. What does it normally do? Seasonality this time of year. A little bit to the downside. I like UPS. 145s right there. Okay, get that out of the way. 145s. Let's go 5 contracts. Okay, market order. Okay, calculator. 477.50 divided by my purchase price, $72,025. Grand total, nope, that's a no. I could have sworn that looked right. Oh, 46. I was doing the wrong one. 46. Oh, I don't do the 47s. Okay, let's try that one. 47s. Uh-oh, calculator. $1,730 divided by the purchase price, 145 to 70. Much better, 1.19. That's up 2%. Click send. There you go. Okay, get that one out of there. That out of there and delete that. So that's 2 of them in a row. And that was just this week's. Okay, let's go back here. Okay, and let's go another list. 100-year-old. I'm still using the same week. Intel. Whoops. INPC. Okay, here, Intel. Whoops. 31, the 31. Ooh, more than 1%. Cool. Okay. A year ago, the low, the high, last 90 days, 30 days. Here we go. 30-day high, 30-day bottom, 2 days to the upside. Awesome. What does it normally do? Okay, yep, I can take it into next week. Then it goes back up again. I'm good with that. It is Intel after all. I have no problems with that. Get back here. Covered stock. I like the 31s. The 31s. There you go. There you go. Calculator. 460 divided by 30, 54. 30, 54. 1.5%. Cool beans. That's 2 trades. Or was that 3? That was 3 trades. Okay, back to Market Watch. Intel. Ford. Okay, Ford. 1243. 1250s. Nope, doesn't make it. IBM. 160, 166. 167s. Nope. PFE. Pfizer. PFE. Pfizer. 2787. That would be the 28s. The 28s are 19. Nope, that ain't gonna work. No to Pfizer. PPG. Ooh, I love PPG. PPG. 136.80 to 137s. Yeah, that's a no. Wells Fargo. WFC. Wells Fargo. $60 to $60. Ooh, no. What's this one next to Wells Fargo? Walmart. Wally World. WMT. 60s. Nope. Apple. We already looked at Apple, didn't we? 184. Oh, the 185s. Yeah, no, we already looked at this one. Didn't quite make it. That was Apple. Capital One Finance. We already looked at. Wait a minute. COP? COP. ConocoPhillips. 122. The 122. $1.42. Take 23 off of that. Nope. The 123s. Nope. Don't make it either. UPS. We looked at US Steel. 36 to 37. Ooh, nice. 37 is more than 1%. Okay, a year ago, here we were. Here's the bottom. Here's the high. Last 90 days. The high, the bottom. Okay, last 30 days right there. Okay, 30 days ago, 38, almost a triple high. Bottom, previous bottom. Okay, yeah, I would wait for it to get one more 2 days to the upside before I jumped into this one, so it's going to be a no. And it's in a downturn. Okay. All right, I just went over, I think, 10 or 12 stocks. All right. Charlotte's Web. Yeah, you see how quickly I jumped around that? How long until you were profitable? Oh, dude, Russ, to be totally honest with you, when I first started trading, I did 125 trades in a row. Then I didn't lose a single trade. 125 trades in a row. It was freaking ridiculous. I couldn't buy a bad trade then. But that was back in the late 90s. Okay? Everything was going up. You could throw it, a monkey could throw a dart and it would go up. That's just the way it was back in the 90s. Okay? But things turned around and I started losing a shitload. Okay, so it is what it is. All right, that being said, so do you see how quickly I do it once I know what I am doing, what I am looking for? You notice I never thought I never looked at any of the fundamentals. Why? Well, because I looked at them before I put them on my list. Okay, if they weren't a contender, if it wasn't something that I'd want to buy, it wouldn't be on my list. Plain and simple. Every single stock on this list, I have no problem whatsoever buying. Why? Because I already did the research. Okay, I put them on my list. It's kind of like buying a bunch of stocks. Okay, you take a look at your 401, your IRA, or whatever, wherever your money is at the moment, if you're not doing it yourself. You take a look at those stocks. It will tell you, right? Oh, perfect example. Let's go to SCHD because people seem to like that one. SCHD. Okay, now SCHD, people seem to like this thing for some strange reason. Why am I doing this? SCHD. All right, that's better. Okay, now here's SCHD. Okay, people love this for some strange reason. I don't like it because it's all over the place. All right, and I don't think they have weekly options, do they? SCHD. Yeah, it's monthlies. I don't like it. But that wasn't the example I wanted to get at. What I wanted to get at is right here. Holdings. What is actually in this company? Okay, well, you have Texas Instruments, Bristol Myers Squibb, Lockheed Martin, Pepsi, Verizon, Cisco, Chevron, BlackRock, Pfizer, AMGN, and then a bunch of others. But these are the top holdings of that ETF. Okay, why can't you do the exact same thing? Find a decent company. They're already listed right here. They're already in SCHD. And then why not buy them one at a time? Buy Texas Instruments, get 1%. Okay, cool, that's 1%. Bristol Myers Squibb, another 1%. Lockheed Martin, another 1%. Pepsi, another 1%. Verizon, another 1%. Cisco, another one, another one, another one, another one, another one. Okay, and you do it every single quarter because they pay their dividends every single quarter. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 stocks. Okay, let's say you get 1% from each one of those each time you trade it every quarter. That's 10% per quarter on all the stocks that are in SCHD. Okay, that's 40% at 1% per 1% each time you trade one of those, and you do it 4 times a year. 1%, 1%, 1%, 1%, 1%, 1%. Okay, you could take a look at any one of the ETFs, find out what stocks they're holding, and then buy them individually. Grab 1% from Texas Instruments. You know who they are. You know who Bristol Myers Squibb is. You know Lockheed Martin, Pepsi, Verizon, Cisco, Chevron, BlackRock, Pfizer, Amgen. You probably know every single one of those. So why wouldn't you do it yourself? Okay, what does SCHD offer per year? Let's go back to summary. Come on. Okay, they're only offering you 3.31%. That's 3% a year. Did you hear what I said? SCHD is offering a 3% yield. That means you buy the stock and you're only getting a 3% return for the year. I listed off all the companies that are in there. Okay, look, Texas Instruments, Bristol Myers Squibb, Lockheed Martin, Pepsi, all good companies. Why couldn't you buy those individually, grab 1% every week? Or the hell with 1%, grab a 0.5%. Let's take a look at Texas Instruments, TXN. TXN. Okay. Texas Instruments, 179. The 180s are going for $1. Okay. Let's do the calculations. Let's say we're not even going to look for the 1%. We'll just take what they're offering. Okay. The 180s, okay, they're offering $1.07. Okay, divided by the purchase price, 179.20. That gives a grand total of 0.59%. Okay, 0.59%. Let's say you get 0.59%. That's a half a percent per week. Let's multiply that by the year because it's a weekly and you can do it every week. Oh, that's 30%. If you did it on your own and only got half a percent. The same exact companies that are in SCHD. Okay, you can look at them right there. SCHD, Texas Instruments, Bristol Myers Squibb, Lockheed Martin. Let's take a look at Bristol Myers Squibb. Why not? It's a good company. Good enough for SCHD to have it. BMY. Bristol Myers Squibb, $43.99. Let's go for the 44s. Oh, 47 cents. That's over 1%. Okay, get my calculator. 47%, 47 cents. Okay, divided by the purchase price, $43.99, $43.99 equals, 1.06. Let's multiply that by 52 because it's 52 weeks in a year. Oh, look at that, 55.5% if you did it on your own. Okay, Bristol Myers Squibb has weekly options. Okay, so what else do we got here? Lockheed Martin, LMT. LMT. 461. I personally wouldn't do it, but without. Okay, 460. Oh, wow, I'm buying it 467. 467. Paying $1.40. Okay, $1.40 divided by the purchase price, 467. 467.70. That gives me a grand total of 0.3%. Oh, that's horrible. I wouldn't do that one. But let's say we did it anyway. 52 weeks. That's 15.5%. Doing it on your own. The exact same stocks that they're charging you to do it for you. Okay, what else we got? Lockheed Martin. Pepsi. We all know who Pepsi is. Okay, 176.49. The 177 is going for 68 cents. Okay, 0.68 divided by 176.49 gives me a grand total of 0.38. Ugh. Okay, multiply that by 52, and that gives you 20%. Okay, people, do you understand what they're doing here? Okay, summary. Let's go back to the summary. Okay, Charles Schwab. If you have your money invested in SCHD, one of the biggest ETFs out there, okay, it is. It's one of the biggest ETFs out there. They're offering a 3.3% yield. 3.3% yield. I just showed you 3 of the top stocks that they have in that fund. You could do them yourself. Get a 0.5%, get a 0.25% per year, per week. 0.25% per week. That's still over 3%. It's your money. You figure out how you want to do it. Okay, this, holy shit, it's 11:30. I'm usually done at 11:30. Hey, Tea with Marie, how you doing? Charlotte's Web, AMD. Uh-oh, I missed a lot of these questions. Sorry about that. Thoughts on PFE? I have 400 shares at an average of 27.30. Looking for another opinion. All right, Colin, you're new here. Okay, let me give you my opinion on Pfizer. PFE. And you said your average is 27.30. Okay, so here's a question for you, right off the top of my head, Colin. If your average price is 27.30, right, and it's at 27.81, why are you holding on to it? Okay, let's say hypothetically speaking, you sell it now. Hypothetically speaking, your average price is 27.30. It's at 7.81. So let's say you get 7.81 for it. What profit are you making? You're making a 51-cent profit. Okay, 51 cents, clear. 51 cents, and your average price is 27.30. That's 1.8%. Now, you're new here, like I said. I only invest in good dividend stocks. Pfizer is one of them. Okay, I invest in good dividend stocks to capture a 1% per week, safely, predictably, consistently. Okay, Pfizer, I like it. It pays nice numbers. At this moment in time, the 27.80, okay, the 28s are going for 19 cents, not quite 1%, but even if you did buy some more and you collect 19 cents per share, you divide it by the purchase price, 27.87. Okay, that equals 0.68%. You multiply that by 52 if you do it every single week, and there you're at 35% for the year. Okay? The numbers don't lie. The numbers are what they are. I shoot for 1% per week. This example here was 0.68%, which is less than 1%. But still, it's 35% for the year. Does it always have to be 1%? No, it doesn't. That's just what I prefer. That's me. I will continue looking until I find them. Now, a couple of minutes ago, I went through, I think, 20 stocks. Out of those 20, I came up with 4 of them to get 1%. It's really not that difficult. Okay, 26. We got enough time to do one more, and that will be the day. What site is that? That's Thinkorswim. It's not a site. It's actually a trading platform through Charles Schwab. Okay, so if you get an account at Charles Schwab, you can download this, and then it has a whole bunch of cool perks in there. I need one more to look at, and that will be it for today. Live is great. What site is that? Okay. Oh. All right. What do you recommend for a Roth IRA? Smitty, you're new here also. My suggestion, come back every day. Learn some new stuff. Okay. Okay, I'm here every night, 9 p.m. to 11:30. It just so happens to be 11:30. Bro, I'm serious. I have no idea what you're talking about. The questions go by so quickly. Amphidious. F-E-L-G. Mr. Tichulo, how are you doing? Really, you want me to look at that dog? F-E-L-G. F-E-L-G. Fidelity. Oh my goodness. It has no options, dude. It's a big fat no. Okay? Now, if it has no options, what am I collecting? If you had 100 shares of Apple at 50 bucks, would you do an option every week? It's an interesting question. All right, number one, if you had 100 shares of Apple at 50 bucks, why the hell would you have it? Okay, it's at 183. There's an old saying, okay, nobody ever went broke taking profits. Okay, and it ain't a profit until you take it. Okay, it's at 183. If you have it at 50 bucks, okay, I would personally, I've never held anything longer than 90 days. No, I'm sorry, 9 months. As long as I've ever held anything. Please text my inbox. Phineas. Okay, Phineas, send me a DM with your number. I'll give you a buzz and we can chat in the morning. Okay, simple enough. Up here at the bio, okay, Dividend Stock Talk. Make sure you're sending it to the right one here on the live right now, because there's 22 people pretending to be me. Now, before I wrap it up, I want to close with this. Number one, it's my little speech. It's not been practiced, so it's going to be a little rough. Number one, don't listen to anything I say. Do your own research. Do the numbers make sense? Does what I say make sense? A good quality company that you're okay with owning for a long period of time. Make sure you do your own research, okay? I'm not any kind of advisor. I'm not any kind of anything. I'm just an average guy that got sick and tired of being screwed over, and I figured this out for my 9-year-old daughter. Now, let me tell you how this came about. Back in 2008, when my daughter was 9, she kept aggravating me for money. Daddy, can you buy me this? Daddy, can you buy me that? Daddy, money. Yeah, I said, why don't you get your own damn friggin' job? Yeah, I snapped. It was probably not very good. But yeah, I have no idea why I snapped. But anyway, She wanted to know what I was doing. I said, why don't you get your own job and figure it out yourself? She said, well, can't you teach me what you're doing? I said, okay. So here's the challenge. A 9-year-old little girl who wanted to spend time with her dad doing the same thing Daddy was doing. So here's the challenge. 9-year-old girl. It had to be simple. Okay? Had to be simple. Had to be safe. Had to be predictable, consistent, and no way she could lose any money. Now, let me explain those all to you. It had to be simple. Why? Because she was 9 years old. She doesn't understand all this complex stuff. She doesn't. Okay? Had to be safe. Well, I didn't want her to lose anything. Okay? I wanted to make sure she was okay with what she was doing. Okay? It had to be predictable. Well, if she didn't make money consistently, she'd get bored and she'd quit. Okay? Predictably and consistently. Same answer. And then no way she could lose any money. Why? Why was that number 5 in there? Well, she's a 9-year-old girl. What's going to happen if she starts losing money? Daddy, I lost all my money. She'd start crying. Then I would feel bad. Okay, so then the wife, the ex-wife, she would make me feel worse for making my daughter cry. Yeah, then I get it all over the place. So it had to be simple, safe, predictable, consistent, and no way she could lose. Okay, that's the 5 criteria I had to come up with. Okay, now, in order to do that, I had 5 rules. Simple rules. If you want to throw more rules into this and just mess it up, hey, fine, go ahead. But these are my rules, and these I stick pretty good at them. Okay, I'd have to say 99.5% I'm good sticking to these rules. Rule number 1. The first 2 rules are the most important. Rule number 1. Never buy something you do not want to hold long term, because you just might have to. Stocks go up, stocks go down. If you buy it and it goes down, then hold on to it. Make sure you're okay with that scenario. Rule number 2, never sell at a loss. It defeats the purpose. Why do that in the first place? Okay? Oh, damn it. Getting old sucks. It does. Rule number 3, must have 20 years or more of increased dividends. Why? Because stocks go up, stocks go down. If the stocks goes down, I want to be at least reassured that I'm getting higher and higher and higher dividends every single year. So there's no downturn. There's no downplay to it. I'm getting a higher dividend every single year. Now, some of the stocks, okay, some of these things that you guys suggested to me have dividends, okay, but they don't increase every single year consistently. Who does? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. I think there's 5 of them. Anyway, rule number 4, weekly options. Why? Well, I want my cash flow to come in on a weekly basis. The reason why I don't like monthlies is because there's only 12 months in a year. It means I can only collect 12 checks per year per stock. Okay, that's still a lot, but still, 12. I'd rather do weeklies every single week. There's 52 weeks in a year. Okay? Number 4, make sure all the numbers work. What do I mean by that? Check your charts. Make sure your timing is correct. Okay, you don't want to buy it at a high because you don't know if it's going to go higher. You don't want to buy it at a low. Okay, you want to buy it low, but you want to buy it after it makes its low, turns around, and starts moving back up again. At a certain time, and it's really not that difficult. Okay, to see. I want to see the high. I want to see the low. I want to see where it was. I want to see where it is. I want to do that for the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality. I want to get a rough idea of where it's going. I want to know what the other buyers and sellers are thinking, because it is us, the buyers and sellers, who decide what's too high, what's too low. Okay, we buy it, it goes up, it gets to a certain point, so oh hell no, it ain't worth that. Then we start taking our profits and it drops down. It gets to a certain point. Oh, wait a second, I'm going to buy it. Look where it is. Up, down, that's all it does. Okay, then I want to check, what am I getting for my efforts? What am I buying it for? 183.80. What can I sell it for? 142. Okay, it's not 1%, but is that enough? Okay, I prefer 1%. You guys can do 0.5%. You can do 0.75% if you want. That's up to you. I prefer 1%. That's my specific goal. Now, I showed you a little while ago how I quickly go through the stocks that are on my list. Okay, I have a bunch of lists. Let me show them to you really quick. Companies that are over 100 years old. Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividends. The Dividend Contenders, 300 companies that have consistently increased every single year. 10 years to 24 years. Not quite 25, but 10 years. 10 years to 24 years. The Dividend Kings, 50 years of increased dividends. Okay, my old list, this is my tried and true ones that I've been trading for over 15, 20 years. And then I have Warren Buffett's list. And then I have a bunch of other lists that I really don't share. Because, I'm a nice guy, but I'm not that nice. All right, so all that being said, it's past 11:30. You guys have a great day. Do the stocks assigned based on the price of the last trade? Well, when the stock is signed, all right, if I'm doing the 185, all right, if I'm buying Apple at 185 and it ends up today, the last trade of the day, over 185, then more than likely I'll be back into cash on Monday. It's the last trade of the day. Damn it. All right, all that being said, hope you guys had a good nice night. Hope you learned a lot for you new people here. I'll be here again tomorrow night. Same time, same bat time, same bat channel. Woohoo! With alrighty. You guys have a great day, and I will talk to you again. Matty boy, nice seeing you, buddy. I'll be seeing you on Monday. All right, that's done. Done here. You guys, Angie, welcome. Catch you guys again tomorrow. And here.